Many people think, if I have extra money, I should pay off my mortgage as soon as possible. But what if I told you sometimes paying off your mortgage early can actually make your financial situation more risky? I am Connie from Prosperity Finance. I've been in New Zealand mortgage industry for over 16 years. Today I want to talk about something that surprised a lot of people. Firstly, why aggressively paying down your mortgage is not always the smartest financial move. First of all, let me be clear. Paying off debt is not a bad thing. It can reduce interest cost, lower stress, and having more security. Those are all great things. But the problem is, most people only focus on owing back less money, and they don't think about what they're also giving up at the same time. Especially in today's world, cash flow and flexibility are becoming more important than ever. Let me give you a simple example. Let's say you have 200k cash. You could use all of it to pay down your mortgage. Yes, that reduces interest, but you also lose the liquidity. You lose the emergency money. You lose the investment opportunity and financial flexibility. You know, life is not always stable, right? Things can happen. Your business can slow down. Job can change. Family can have unexpected situation. For many people, the biggest financial risk is not having too much debt. It's about having all their money locked inside their house. And financially, they can become dangerous. Another thing many people overlook is this. Not all debts should be treated equally. For example, if you have investment property loans, that has a tax advantage. If the loan is aggressively paid down, you reduce the interest cost, therefore you increase the profit and you're paying more tax. So it makes sense to prioritize owner-occupied mortgage first, or high-interest personal loan, or credit cards. So the real question is not, should I pay off the debt early? The real question is my money sitting in the most effective place? There's also something else people lose when they put all their cash into the mortgage, which is the future opportunities. For example, when the market drops, you probably have had the chance to upgrade your family home, or buy an investment property, or start a business. But because all your cash is trapped in the house, you become asset rich but cash poor. And that's a very risky position to be in. Personally, I believe the smartest financial strategy is not who can pay off the mortgage the fastest. It's about finding the right balance between reducing the interest and managing the risk and maintaining cash flow, preserve your lifestyle, and keeping future opportunity open. Because a mortgage was never meant to be the ultimate goal. It's just a financial tool. The important thing is that tool actually helping you create more freedom in your life? If you are unsure what repayment strategy is right for you, feel free to get in touch with us. So far, we have talked about why paying off your mortgage as fast as possible is not always the smartest move. And now I would like to discuss further because there are still a lot of people who want to know, okay, I do want to pay off my mortgage faster, so how do I do that? Great question. Honestly, every homeowner wants to know the answer to this. Let's break this down into a few pieces that are easy for us to digest. There's actually only some core principle that we need to remember. The first one is most straightforward, which is paying down the principal. Because the faster you pay principal down, the less interest you pay over time. And usually there are two ways people do this. The first is making lump sum repayment. A lot of people do this when their fixed loan ends, because at that point, the loan moved to floating rates on the day, which means there won't be any break cost. And the second way is simpler, but more powerful. So instead of paying bank minimum repayment, you can keep repayment higher. For example, when your interest rate is due for refix and is lower, instead of paying less repayment, you could keep your current repayment. If you keep that amount, you are quietly paying extra principal every single month. Another strategy is to shorten the loan term. The bank may approve your loan for 30 years, but you may decide to structure your loan over 15 or 20 years instead. That actually increases the repayment, which help the principal reduce faster. So in simple terms, the more principal you pay, the faster the mortgage disappears. Now, the second strategy is very different, and that is using leverage through investment property. What do I mean by that? Let's say you buy a good investment property. Now, over time, the property value increases significantly, but your loan may not increase much or may even reduce. In other words, you are using assets growth to accelerate wealth creation. And in the future, you may want to sell that investment property, pay off that mortgage, and potentially pay off your unoccupied mortgage too. So sometimes buying a good investment property can actually help you pay off your home faster. And honestly, the statement is not wrong, because without leverage, many people are only relying job income to chip away that debt. The third method is property flipping. You buy now, renovate or add value, then sell quickly for profit. If done successfully, this can generate cash very quickly. What I do need to say is very clearly that this strategy carry much higher risk, especially in a market that is not very strong rising. And many people underestimate the risk. Also, banks generally don't want to lend these kind of short-term flip projects. So many flippers have to rely on finance company or private lending or their own cash to fund the projects. Personally, if someone has no experience, I usually not recommend starting with a flipping. For most people, the more realistic and sustainable approach are usually gradually paying down more principal and building wealth through buying a good investment property over time. But I still want to remind everyone, paying off your mortgage faster is not automatically the best strategy. Whether it's worth doing depends on your cash flow, your life stage, your risk tolerance, and whether there are better opportunities for your money elsewhere. So the key is balance. So what do you think? Would you prefer paying off your mortgage as fast as possible, or would you like to keep more flexibility and investment opportunity? Leave a comment below. I'd love to hear your thoughts.